This roller coaster that we call the U.S. economy keeps taking unexpected turns, especially after today's U.S. labor market data and retail sales data. The data showed that stores had more sales in July than they did the previous month in June, which helped people worry less about a recession coming. And the data showed that fewer people than expected filed for unemployment. So supposedly, the labor market is still strong. Because of that, people think the U.S. economy might not crash, and it's less likely that the Federal Reserve might have to do a big cut on interest rates in September. This caused a lot of moves in the markets, but should we be celebrating yet? And how can you take advantage of all this craziness happening in the markets right now? Well, I will tell you exactly that in this video. What's up, guys? My name is Josh Reveo, and if you're watching this video, it's probably because you're wondering, why do the markets think that the economy is doing so good right now? Well, to keep it simple, stores that sell all kinds of stuff, from cars to clothes, supposedly they all had a pretty good month in July, especially in the car section. People bought more cars and car parts than the month before. But even if you take out the cars and just look at the other things that people bought, sales still went up a little bit. Not too much, just a little bit, so don't get too crazy yet. And if we look back to last year, the data shows us that stores are doing pretty well. All these signs together are making investors think that the U.S. labor market is doing pretty well right now. But how do the markets react to it? Let's take it to the charts. So here you can see my economic calendar where I can see the data coming out in real time. And if we take a look over here at retail sales, we can see that the expectations from the markets were to see an increase of people spending at 0.3%. And if we take a look over at the box right next to it, we had an actual, which means the real number that came out was 1.0%. So this is an increase to the upside by 0.7%. Right? So retail sales is the first piece of data that came out, and it came out higher. So retail sales coming out higher is looked at as good for the markets because as we get more consumers spending, this is going to help, reduce recessionary fears, because in a recession, you're probably not going to have a lot of consumers going out and spending. So what we see, a 0.7% increase, which is above the expectations of 0.3%, this is looked at as good for the economy. Now, the other piece of data that came out is called initial jobless claims. This is just the number of new people that are claiming unemployment benefits each week. If we take a look at the forecast of what the markets were expecting, we were expecting 235,000 people to be claiming unemployment benefits. Now, you take a look next to that, 227,000 is the actual, which means it came out 8,000 people below expectations. Now, what this means is when you have less people claiming unemployment benefits, this is technically showing us a stronger than expected labor market. So now we have two pieces of data, right? You have retail sales data, which is coming out stronger than expected. Once again, good for the economy. And you have jobless claims data, which came out lower than expected, which once again can be looked at as being good for the economy. You now have two pieces of data which are looked at as good for the economy. This is the best tradable opportunity that you can get, is when you have two pieces of data that come out and they give you the same bias in the markets. If they do not come out together, that's when you get choppy markets, you get fake outs. That's what destroys traders' accounts. If you see the time that the data came out, we take a look here. This data was released at 8:30 Eastern time, right? And if we go take a look over at NAS, I'm going to move this off the screen for now, and we'll take a look at NAS, where the move was. Right here, you can see it's pretty obvious. You can see exactly where NAS reacted, and it even gapped when the candle opened right here. So if I were to put this little line here and you look at the bottom, you can see that this data, and it lines up right above that candle at 8:30 with the time being at the bottom. So this is the reaction from NAS. Remember, NAS is a risk asset. So what that means is when there's market fear, NAS is going to drop. When there's market optimism, NAS has a very high likelihood to push to the upside. This is because when there's market fear, investors typically sell out of volatile assets. These would be things like NASDAQ, US 30, S&P 500, and they're going to pool their money into safe havens, gold, US dollar being a couple examples. So when we see market optimism, which once again, that's what this data gave us today. It gave us a removal of recessionary fears. You're going to see the markets go into what's called optimism, or risk on would be the correct term for it. When you see market optimism, that's why you see a push to the upside on something like NASDAQ. That's all good, but how can you take advantage of this as a trader? Let's break it down on the charts. So the data comes out and you see this reaction start to move on NAS. What do you do? When do you take an entry? Where do you put your stop loss? How do you manage this trade? If you understand that this data should be bullish for NASDAQ, you already know that you're looking for buys. The only question comes down to what type of risk to reward are you comfortable with, right? So you can enter 1000% on an open candle and not wait for a closure way up here. Because realistically, if you take your entry up here, you're looking at your stops being somewhere below the support at the very least, and this can hurt your risk to reward. Now, obviously, if you play this out for long term, it's really not that bad, but it would be much better to have an entry somewhere down here. When you're seeing NASDAQ push up and it's supported by data, this is what you consider a high probability trade. So it doesn't matter if you enter here or if you enter way up here. At first, it might be a little scary because of the volatility, the volume, the risk to reward, whatever. But take a step back and look at what Nas has done. This still wouldn't have been a bad entry. Sometimes you just have to get a little more comfortable with entering when there's volume or when there's volatility in the markets, because that's what economic data has the possibility of doing to the markets. These are the confirmations that you need to look for when entering a trade, especially using economic data. If the data is in favor of NASDAQ upside and you physically see NASDAQ pushing to the upside, it's just a matter of waiting for technicals to line up, break out of a resistance zone, and take the entry. This is why it's so important to have a trusted news source for your economic data or your news. For example, I have a Reuters news terminal, and this is what keeps me up to date in the markets. Because if you're focused on things like mainstream media, or you're watching TV, or you're going to social media channels to get opinions of analysts, you're going to be looking to enter trades after everything's already happened. You're going to be behind the curve because the markets also have access to these news terminals. They're getting access to information immediately. When you take a look at hedge funds or anyone managing millions of dollars, hundreds of millions of dollars, they're not waiting for a TV network to post something. It's all coming through a trusted, reliable, and speedy resource. The faster you get your information, and the better you are at understanding how to use that information to the asset that you are trading, this is how you're going to make more profits consistently. I hope this information was helpful for you guys. I do these videos because this is information that I wish I had access to when I first started trading. There's so many channels out there that will only talk about technicals and tell you that economic data and news doesn't matter. And then you're going to see channels that are talking about just economic data. And honestly, it's a little boring and they're not telling you how to profit from it. So if you can combine these two and understand when things happen, it's going to move the markets. If you watch this entire video and you're at this point right now, hopefully you watch this and you're seeing everything I said makes sense. So if that is at least enough to open up the idea that this stuff matters, then this video did its job. Make sure you subscribe and turn on the notification bell so that way YouTube delivers you the video every time we post. If there's any questions that you guys have, just put it in the comments below and I'll see you guys in the next video.